I hope this forum serves as a valuable platform to inspire you to consider Sri Lanka as your next investment destination in South Asia. In closing, let me assure you that the Sri Lanka is open to business, partnerships, and innovations. So we are committed to building a prosperous, sustainable, and inclusive future for everybody. I invite you to join us in the new era to invest, collaborate, and grow together. Thank you all.
本フォーラムが皆様にスリランカを次の投資家としてご検討いただけるきっかけとなることを願っております。最後にスリランカはビジネス、パートナーシップ、イノベーションに対して常に開かれていることを強調したいと思います。スリランカは豊かで持続可能かつ包摂的な未来の実現に向けて全力で取り組んでおります。この新しい時代に皆様がスリランカへ投資し、協力し、共に成長していくことを心より願っております。ありがとうございました。
ありがとうございました。Thank you very much. Now, next, let's move on to today's keynote presentation. Mr. Talal Rafi, economist and director of business consulting at EY Sri Lanka, will talk about economic crisis and recovery. So, could you start your presentation?
Thank you. First of all, good afternoon, everyone. It's an absolute pleasure and honor to speak here. And my greetings to His Excellency, the High Commissioner, Professor Kumarasinghe, and my thanks to Hiroki-san. And good afternoon, ladies and gentlemen. So a few words before I start on. Japan has been a very long-term friend of Sri Lanka, and we are very thankful for it. Not only that, for decades, Japan has been giving us grant aids, projects, and even where it's been financing, we see that grace periods have been very long and interest rates in most cases even below 1%. And not to forget the technical support we get through organizations such as JICA and others. So my thanks to everyone from Japan for all the help. We are very grateful for it. So I'll start my presentation. Hope everyone can see it. Right. So today I'm going to speak about Sri Lanka's economic crisis and recovery. So, so to start, where is Sri Lanka at the present moment? So we must be quite thankful that Sri Lanka's economic recovery is gaining momentum. I mean, real GDP growth for 2024 was 5%. So which is even exceeding the figures predicted by the IMF for 2024. So we have done very well. And indicators show that all sectors are set to expand. So even the industrial sector is expanding very high at almost 9%. So we are seeing growth. So Sri Lanka is back to economic, macroeconomic stability. So as far as the fiscal policy goes, the government projects revenue increases of 23%, so to 4.9 trillion rupees, and expenditure is also set to increase by 17% to 7.2 trillion rupees. The fiscal deficit will be 6.7%. So we have gone a little bit back on that, though the IMF benchmark is 5.2%. So overall, the stability is there. Another key point that must be understood is decreasing inflation. So Sri Lanka is almost seen as an excellent example by many national organizations as well, because in 2022, our inflation was at 70%. So we could have gone the way of Lebanon or Zimbabwe or Venezuela, but extraordinarily, within 10 months, Sri Lanka brought it down into single digits. And right now, Sri Lanka is in a deflation mode. So the deflation is largely due to electricity tariff cuts, lower fuel prices, and improved domestic supply conditions, and also the appreciation of the Sri Lankan rupee against the dollar. So reserves are also up. So let's not forget that when Sri Lanka declared default on external debt, our reserves were almost down to 20 million US dollars. So almost touching zero. Today we have recovered. We are at around 6 billion US dollars. The IMF requires that we should have 13 billion US dollars by end of 2027. On the primary budget balance, we have overperformed by 2.2%. So primary budget is expenditure minus revenue minus the interest payment. So we were given a target and we have overperformed. So the debt situation is also improving. You know, T-bill, the yields have reduced from 14% to 9% through 2024. And right now, if you see, it has come down to almost less than 8%. So which is extraordinary. So we have to give a lot of credit to the current government for continuing the stability process initiated through the IMF program. As you see, the GDP growth, if you see in 2022, we were at minus 7.3%, 2023 minus 2.3%, but now we have gone to 5.2% real GDP growth. And the trade balance, here again, it has improved from the situation. You know, in 2018 and 2021, we were even going below 8% of GDP. So right now we have reduced it to 5.2%, and there is a bit to go. And hopefully with the exports gaining pace, we could reduce this further. So Sri Lanka as a whole relies on worker remittances also, which are coming through. About 6.6 billion US dollars came in for 2024 alone. So that is something that helps the current account to be positive. Here again, Sri Lanka, which hasn't achieved a current account balance for the last, let's say, since 2000, it even goes before that. In 2023 and 2024, we have achieved a current account balance. So the amount of foreign exchange coming into the country is more than what it's leaving out. So these are very positive developments for the economy. And the yields, as I said, at a very high of over 30% at the crisis time in 2022, have come down to less than 10%, so single digits. So, so as the topic goes, we'll have to understand what are the causes of the economic crisis. So I'll just go briefly on that. There have been a lot of structural causes for Sri Lanka's thing. So before I go into each of them, the positive thing is that Sri Lanka's economy is in this state because we haven't done the reforms. So it means that the positive is that there is a lot of space for us to expand if we do the structural reforms. So there is, it's not like Sri Lanka has done all the reforms and we are looking for further growth. So there is a lot of potential for extra growth. So Sri Lanka, the structural causes have been a lot. One of them has been subsidies. So Sri Lanka in 1948, I think after Japan, Sri Lanka was the second best economy in Asia. So right up to the mid 50s, we had a more liberal economy, the trade liberalization, I mean, it was on. Then Sri Lanka shifted towards a more model where it was a bit like how Latin America was, or India was import substitution methods and others. But the populist policy was subsidies. Sri Lanka moved into a lot of policies where a large number of subsidies were given. Like we see throughout that rice was given, bread was given at much lower prices, or fertilizer. So these all added up to the fiscal deficit. Sri Lanka in 76 years has only achieved a fiscal surplus once. So this has been a very contributing factors for Sri Lanka going to the IMF program for the 17th time in its 77-year history. Public sector expansion has also been a structural issue, which are all dealt with in the IMF program stated. So public sector, for example, was much lower until the mid-2000s when it was 700,000. But by the mid-2010s, it had almost doubled to 1.4 million. So this takes a substantial amount of government expenditure. Currently, about 5% of GDP goes to paying salaries and pensions to state sector employees. So this is one of the things that the IMF has stated through state-owned enterprise reforms. Low tax revenue. This is something that is very positive that the current president is working on. Is Sri Lanka has a history of low tax revenue. So we were going high in the even about 20% in the mid 1990s, but drastically it reduced. At the peak of the crisis, Sri Lanka's government revenue to GDP was at less than 8% of GDP, which is one of the lowest in the world. So if you look at, so currently we have come up to around 15%, which we are trying to achieve by this year. But if you look at other countries, India over 20%. Nepal, which is much poorer than Sri Lanka, has a government revenue to GDP ratio of over 30%. So these are areas where Sri Lanka has, I would call, structural policies. On the fiscal side, once again, large fiscal deficits, which have been financed by monetary financing, which is printing money. So this has consistently led to Sri Lanka having a higher inflation rate compared to other countries in South Asia. So this is something that has been addressed by the IMF through the Central Bank Act, as the High Commissioner mentioned. So this is a very positive development because right now the country cannot do monetary financing, meaning printing money. So that's one of the major IMF reforms. The other thing is debt. Large fiscal deficits have been sustained through debt, which is mostly borrowing through the state-owned enterprises and through treasury bills and bonds. So this has piled up debt, which reached almost 128% of GDP at the peak of the crisis. So currently, Sri Lanka is trying to reduce it to 95% by 2032. Trade and investment policies have been another major structural cause for Sri Lanka's economic downfall. Protectionist policies, especially when it comes to trade, even for automobile imports, the duties are over 300%. So if you look at para tariffs and others, which don't even outside of the WTO regulations, Sri Lanka ranks extremely high. So as former central bank governor Indrajit Kumaraswamy said, one of the main reasons why many sectors are unable to export is because when the para tariffs and duties are high, because about 80% of imports are for intermediate and capital goods. When this cost goes up, when the input cost goes up, our export outputs become less competitive and where we fail. Trade facilitation is another area. So this is something where Sri Lanka ranks quite badly, even ranking worse than sub-Saharan African countries. But the positive is the present government is working to improve the situation in these areas, including red tape, as the president himself said at a recent private sector chamber meeting that it takes extremely long amount of time to do things. There are so many licenses. So it's very positive that the present government is working on these areas, which when done will be extremely good to in facilitating investments and trade. So other reasons have been land laws, about 80% of land being owned by the government. Labor laws, we have labor laws that were done in the 1950s. So here again, once these two areas reforms touch, there is a lot of potential for growth for Sri Lanka. The last structural reason is also lack of entrepreneurship. Around 2% of Sri Lanka's population are entrepreneurs, which is quite low because if you look at Bangladesh or Thailand, the figure is in the double digits. So these are reasons why Sri Lanka has been down, which we can call as structural causes. The positive is that if we can do these reforms, Sri Lanka has a lot of potential to go up. The short-term causes of the economic crisis, when I mean short-term, is from 2019 to 2022. In that 3 years, what happened and what brought Sri Lanka, which had structural issues, to the point of bankruptcy. So tax cuts in 2019, this was the main cause. Due to this, Sri Lanka lost access to international capital markets. So S&P, Moody's and Fitch downgraded Sri Lanka, pushing us out of capital markets. So once we were out of it, Sri Lanka started using $7.9 billion of reserves in order to pay back debt. And then COVID-19 struck, which affected tourism, remittances, and exports. So that meant the current account also couldn't sustain it. And then we rapidly started using up our reserves until we got to $20 million, only that much left in April 2022, when Sri Lanka had to default on the external debt. Bad economic policy decisions also contributed. Sri Lanka decided to become organic within 24 hours, which is not practical. So this led to almost the agricultural output falling by half. So this was bad economic policy at that time taken by the government in 2020. Modern monetary theory. So Sri Lanka has become a textbook example of where modern monetary theory was used, where the whole idea was printing money, which will spur economic growth, and then the output will match the amount of money supply, which failed miserably. So there was excessive printing of money during that period. Pegging the currency to 203 rupees to the US dollar, the currency was overvalued, and then there was a outside market for it. And then once the currency was floated, it went from 203 to almost 360 within weeks. So that is, and the last and most important reason was not going to the IMF early. So back as early as 2020, many experts started telling the government that the debt was unsustainable, that they should go to the IMF early. So if we had gone to the IMF in early 2020, we would have gone there with about $7 billion in reserves, and none of these things would have happened, the large austerity measures. So why is the economy getting better? So the first reason is macroeconomic stability. So the continuation of policies by the present government, adhering to the IMF program. So that has resulted in inflation being under control. The currency is stable at the moment, and economic growth is in the positive. So a large number of factors are playing their role here. Then the Sri Lankan government implementing the IMF program. The IMF program has, though there are critics saying that the IMF program is only $2.9 billion, which is around 4 or 5% of Sri Lanka's total debt. The point to be noted is the IMF brings verification. It's more like an auditor. So the ADB, World Bank funding are all connected to the IMF, and also the debt restructuring. And also the IMF program brings investor confidence. So the Sri Lankan government implementing the IMF program, we have passed the mid point of the program. And as the first managing director, Geeta Gopinath, was in Sri Lanka this month, and she mentioned Sri Lanka is well on its way in implementing most of the program. Debt restructuring has also been another positive, because by restructuring debt, it has given fiscal and current account space, because otherwise Sri Lanka in 2028 has to pay $3 to $4 billion, which has been pushed till 28. So that is one thing. Debt restructuring also took away the uncertainty, bringing the interest rates down. So when people know the future is certain when it comes to interest rates, inflation, etc. The other point why the economy is getting better is political stability. So we have a government that is reform-oriented and also with a 2/3 majority. So there is stability at least till 2029. Investors, others are confident that there would be a continuity of policies. So these are factors that are contributing to why the economy is getting better. So the economic outlook for Sri Lanka would be moderate economic growth. So the World Bank forecasts 3.5% for 2025 and 3.1% for 2026. Of course, if things go well, Sri Lanka can post higher growth. Like, for example, the forecast given by multilaterals for 2024 was also less, but Sri Lanka came out with 5% growth, beating the more stricter forecasts. Political stability, tourism, and remittance increase are also contributing to economic growth. So inflation is likely to stabilize at 5%. So will rise due to, so currently it's almost in a negative territory, but it will rise due to import liberalization, increasing demand for products, and political stability. And we are likely to see it become positive by mid-2025, which has already passed, getting to that point, sorry, and achieving the central bank target of 5% by the end of the year. So midterm outlook would be optimistic, subject to favorable external factors and sound policy implementation, which I will touch on later. Completing the IMF program would also ensure international assistance and economic confidence. So now to get to the positives, but there are also potential risks to economic growth. One risk would be not implementing the structural reforms. As I mentioned, there is a lot of space for Sri Lanka to expand if we do the structural reforms. So structural reforms are holding Sri Lanka back. So it's just that we have to do the necessary reforms, which the present government understands, for us to see much larger growth in the coming years. So SOE reforms is a must on this front. Losses to the treasury are huge. For example, Sri Lankan Airlines, the treasury had to take over about 500 billion US dollars worth of debt in 2024, which was almost equal to the entire personal income tax collection for that year of Sri Lanka. So that was largely towards one state-owned enterprise. So if the reforms are done, restructured, and in certain cases, institutions with commercial interests could be privatized, there could be a lot of fiscal space for the government to invest in capital expenditure, increase social security spending, invest in education and other fronts. The other thing is slows economic activity. So when a large number of state-owned enterprises are involved in economic decisions, it also slows economic activity. There is also an opportunity cost when there are large SOEs involved in which may be profitable, but that sort of capital could be used for something else also, especially the education sector. And the crowding out effect, when losses are taken and most of the time, for example, if you see the dollar loans taken for CPC is around 788 billion rupees. So these are mostly borrowed from the state banks or treasury bills, bonds. So here again, the money that could be used by the private sector is taken over due to debt. So that again means the interest rates go up. So these are fronts that could be done in the coming years. Trade reforms is another thing. Sri Lanka comes across as one of the most protected economies in the world. As we see, when you liberalize trade, we see the example of Southeast Asian countries and others, the economy usually tends to grow, because then the biggest point about the sector trade liberalization is that it identifies productive sectors, and at the same time it also identifies sectors which are not productive and which eventually through market forces will shut down, making the economy more productive. Affects exports. As I mentioned earlier, when the input costs are high due to tariffs, para-tariffs, non-tariff barriers, it usually adds to the production costs. So exports are naturally high. Ease of doing business is something that has to be tackled. As I mentioned, the president has mentioned that he is focusing on this area. Sri Lanka ranked 99th in the world when it comes to ease of doing business, and we have to move further on these fronts. Land and labor reforms, as I mentioned, is a must. So these are some of the things that are potential risks for economic growth. Not implementing the IMF program is another risk, which is highlighted by the IMF itself. So the biggest hurdle would be political pressure, because most of the things that are in the IMF program are not understood by the public, and there could be political backlash. So that is one of the concerns that the IMF has stated. There could be, it would be very tempting for any government to not pursue it, because it's not very popular. It's good for the country, but it's not understood by the general public. Fiscal policies, revenue expansion is a challenge. So currently, we are expecting around 300 billion rupees through vehicle import duties to get to 15% government revenue of GDP. 15% of government revenue of GDP is still one of the lowest in the world, where India is doing about 20%. So that is a challenge. Achieving debt sustainability after 2028, we would have to pay $3 to $4 billion a year. So that also would be a challenge. Hopefully, we can get access to capital markets by then, which shouldn't be a problem at the rate we are going. Geopolitics, so once again, balancing relations between India, China, and the US. So that is also going to be a concern which Sri Lanka will have to navigate smoothly. External shocks. So these are some of the things that Sri Lanka is most vulnerable to. Not only Sri Lanka, many countries around the world. The weather has played a major factor also, but the wars, even the 2022 economic crisis was largely caused by the Russia-Ukraine war was also a cause. Even right now, an Iran-Israel war or the closing of the Strait of Hormuz would have major impacts on the Sri Lankan economy, especially if even if fuel prices increase by 20%, that would add to another $1 billion in import costs. If the government tries to subsidize fuel, that would add 300 billion rupees to our fiscal deficit. So wars, those are also concerns. Energy price fluctuations, as I mentioned, that's another concern. And finally, US interest rates. So if interest rates in the US are increased, that would force the central banks around the world to also increase rates, which would be an impact. And when rates are brought up, it also means that the largely Sri Lanka relies a lot on the US and Europe for exports. That would also be compromised. The positive impacts for businesses. So moderate economic growth, Sri Lanka grew by 5% in 2024, though IMF projected 3%. So Sri Lanka has exceeded the IMF expectations. Growth across sectors can be expected for businesses. So there is a large amount of growth coming in diverse sectors. Decreasing inflation, so that means that it's a more predictable business environment. So these are positives for investors looking to come into Sri Lanka. Interest rates, lower interest rates expected with reduced inflation. So right now, treasury yields are coming even below 8% mark, which is quite positive, as the expected inflation rate targeting would be around 5%. So these are quite positive things showing the country has achieved macroeconomic stability. Improved external conditions. There is a very large increase in the number of tourists coming into the country. Rising remittance inflows is increasing. The trade deficit is decreasing. As we saw in the recent report, exports have grown by an amount, resulting in stronger demand. The IMF program, greater bilateral support, especially from Japan. Japan has also been very helpful, being in the creditor forum along with India and France. So these have increased investor confidence, especially as our friendly nations, Japan and India, have come on full board in supporting the Sri Lankan economy. So going forward, I would say the things would be, going forward, the external debt restructuring, which has been largely completed, especially the bond holders, and also the bilateral these things with countries which are being signed. So that is giving certainty to the economy. Completing the IMF program is also crucial. Primary budget surplus of 2.3% by 2025, which should be attainable, but we also need to keep that in the coming years. Gross financing needs from 34% in 2022 at the peak of the crisis, we have to bring it down to 13%. So currently it's at 24.9% according to the last IMF staff level report. Public debt has to come from 128% at the peak in 2022 to 95% by 2025. So these are things where the government is projected to achieve the targets. So so this would be the concern would be the debt repayment starting in 2028. So the thing is, Sri Lanka will have to gain access to international capital markets by 2028, because there will be a financing gap of around $3 to $4 billion starting 2028. For that, gaining access to international capital markets would be good, because right now Moody's and Fitch have upgraded us, but S&P still holds Sri Lanka under selective default. So we would have to get at least to B- in order to start borrowing from the capital markets. So overall, I would say things are looking quite positive. We have achieved macroeconomic stability, but what Sri Lanka needs is to go full on structural reforms, which will open us up for fast economic growth. And with that, I'll end my presentation. Thank you very much.
Thank you very much for your insightful presentation. And also, では続きまして、NX 南アジア・オセアニア株式会社スリランカ支店長長野真二様より、スリランカでのビジネス事例、物流事業と今後の可能性についてご講演をいただきます。それでは長野様、どうぞよろしくお願いいたします。
はい。おい様、ご紹介いただきありがとうございます。よろしくお願いいたします。では、プレゼンテーションを共有させていただきます。